Hey friend, the yield curve, it's showing you just the difference of money lending rates. And once it goes to where it is now, it's inverted. On the surface, it makes no sense. Because you would say, why is somebody willing to give you more money in the short term versus the long term? That makes no sense. Like, if one guy said, I'm going to start a business, I'll see you in 20 years to give you back your money. And another guy said, okay, I'll start a business, I'll see you in 2 months. The guy who's going away for 20 years, you want more money from him. And the guy who's coming back in 2 months, you're like, oh, that's not that risky, I'll see you in 2 months. But the yield curve inverts that. That's where it is right now. So it's like saying, why is the guy with 20 years distance when he comes back, why is he going to pay less money? And what you end up finding out is the big money in the world, the insiders, the scam, they assessing all the probabilities of stuff around the world, stuff that you and me can't see. So I don't know if you know, but you know there's billion-dollar institutions at hedge funds. They pay researchers in every single country. They want to see, is there anything going on in Africa? Is there anything going on in Australia, in China? They pay people and scientists and everyone around the world to give them information. Because it's kind of like if you're managing like a $300 billion fund, you could put like, you could spend like a couple of $1 million per year, just have somebody in each country, just to give you an idea. Yeah. So what they do is once they start to figure out that there's something a bit wrong with the world, they will start buying the government bonds in the long run. The long run. And what ends up happening is the price that they get paid there in the long run, it actually becomes cheaper. So don't worry about how the inverse of the bond and prices and the yield happens, but it's because there's too much demand. So that's what they end up doing. All these insiders, they know something, so they go buy the long end bonds. And when they buy the bonds, the price goes up, and then the money lending out in that long term is lower. So people are confused. They're like, why? So that's why, right? If someone said to you, hey, in 20 years, that guy who's going to come back, he's paying less money because it's less risky. You think, why? Why are they willing to do that? They know something. They know something's going to happen in the short run that's going to make that amount of money in 20 years look good. That's how people can, that's why that yield curve gives you a recession indicator. Because there's insiders who are buying that junk. There are insiders who, they've gone to the long end of the yield curve. So I'm going to show you the yield curve right here, okay? So, this is the insiders. Insiders are doing something, okay? Insiders are doing something here. This was before the 2020 zombie virus. You see, insiders are doing something. Insiders are doing something. Do you see how it goes below zero? That's why this little pocket below zero, there's insiders. You see that? They know something. In each time, there's a big, they know something. Now, it's not always just insiders. Sometimes the problem is so big that people obviously know that, but that's why. Basically, the insiders, they know something is bad's going to happen, but they want to get in now. It's kind of like, right, a bomb is going to go off in the building. There's a bomb in the building, okay? Let's say you're in a building, there's a bomb, and it's going to go off at some point. You're like, well, anywhere in the next 6 to 12 months, it's going to go off. You don't wait until month 5.5 to leave. You probably leave now, 5 months ahead. So if somebody's watching the building from outside, they go, oh, what does that person know? They know there's a bomb in there. Okay, but doesn't know exactly when it's going to blow, but they know it's going to blow. So you could be considered like an insider. Well, those insiders leave footprints in the biggest $1 trillion yield curve asset in the world. So why they do this is, if you're an insider, let's say you knew Crypto Banter was going to shill a token. You'd put in like 10 grand, you'd buy it, and then you make like a 5x. Okay. These guys don't have $10,000. They have more like $80 billion. There's no liquidity to get in. The big stuff that they punch money around in is US bonds. So this yield curve, it's spreading the 10-year versus the 3 months. You see that? So isn't that wild that, look, it's the 10-year minus the 3 months. That's crazy. You are getting a better yield in 3 months than you are 10 years. Like, why? Why the hell? It's because that someone knows something for the long end bonds. Now, it's not exactly 10 years where things take time to play out. It's just that the 10 years is very sensitive, okay? It's almost like a good example. Let's say you knew Richard Hart was going to beat the SEC. You knew he was going to beat the SEC. So people will go buy Richard Hart core coins. But what you want to do is you go, oh, if Richard Hart beats the SEC, there's going to be risk on feeling. So you're going to go buy like some meme coins. So you buy some meme coins ahead of that. Do you see what I mean? And what might happen is too many people buy the meme coins and their prices go up and he hasn't beaten the SEC yet. But when those people know too much information, they come in and they start acting here because here's the thing. You want to know something crazy? These people knew there was a zombie virus here, July 2019. So someone out there, they knew about the zombie virus, that it was coming. They knew some weird stuff was happening in China, right? Look at this. It inverted out of nowhere here. Look where we made May 2019, bro. They were still like holding rates. They started to cut rates a bit. Bitcoin had a big run to 14K. No one knew the zombie virus. You see look how early they were. They were so early to it, man. July, May 2019. So they're just showing you like these extreme parts. They knew. Some could be Rothschild, could be anything. It just, yeah, but the market figures it out. Okay, because that's what happens. And you don't need a lot of people to figure it out. It just takes a few people. If a few people figure it out, there's people who watch the price action and they go, that's weird. You know something. I mean, like, perfect example, bro. In 9/11, before the 9/11 towers fell, there was a law firm and a finance firm, I think, run completely by Jewish people. And before the towers fell, like I think like 3 months before, like they all left the building, all of them. They all left, and I thought it was like a conspiracy, and it was actually true. So imagine you were like watching them. You're like, hey, these guys, they're a signal, and then they leave, and then you go after them. You're like, you don't know what's coming. You don't know if it's gonna be a bomb, if the tower's gonna fall. You have no idea, but you just know something's coming. Okay, but that's what this something is coming is. But look how much it's inverted now. Something is coming. It's just that so many people are aware something is coming that they're really scared here. It might actually have an opposite effect. Because here's the thing, man. If you were going to plan a world event, if too many people are expecting that world event to come in and be like that, it must not go to their plan. Something must screw them up. It's like we're aware of the scamming. Okay, so that's what they never want to do. They never want to spook people. If people realize that they really like got a leash of themselves, there might be revolution overnight. That's what these governments are always trying to do, trying to keep people at bay like that. So this kind of makes sense. This is like I've given you a very high level analysis of these. Some people who are like non-conspiracy people, I don't want to use that word conspiracy, but they just think, oh, it's just a natural phenomena of markets. People think the economy is slow. Nah, bro. No, there's insiders, dude. There's insiders. People know, dude. Just tell me, I want to ask you this question. Who the hell is willing to accept less money for 10 years than in like 3 months? Who on earth? Tell me why that's a good idea. You know something. Hello, I'm just going to go take more risk, guys. I'm just going to go take more risk because I feel like it. That makes absolutely no sense whatsoever. You're literally handing money away. Or are you handing money away? No, they're grabbing the liquidity now because they can't grab the liquidity later. Because when the event starts happening, the liquidity pools and everything gets basically like the stock market cracks, and then these things just are thin. You know, it's literally like, remember when XRP Ripple beat the SEC? Such a great example. I'll actually show you the chart now. If you look at Ripple beating the SEC, let's have a look at it. Okay, right here. Here you go. Look at this. Pop. There were, just to let you know, there were big guys. They found big guys accumulating here. You know that? We saw that on chain. The open interest for Ripple was here. Big. Okay? Someone big knew. We saw right before the crap, there were people here. So you don't know, you can't see on chain, but there were an extreme amount of longs in XRP. Extreme amount. And then that's why I said, man, I got a feeling Ripple's going to beat him. Something's going to happen. I remember we were saying that. We'll say, like, why is there a very suspiciously large amount of longs of XRP? Look what ended up happening. Pop! They smacked it up. Look at this in one day. So you don't have time to get in anymore. You have to get in all here. And there you go. They start getting out. I don't know if they got all out of all of it, but they just, see, scum. But that's the game. The whole game is insiders, you know. But it's not just about insiders for the short term, because you can be an insider, but you can only have an inside information for the next like 7 days. What if a bigger community comes and overpowers you and they run the community coin higher? I mean, like, I'm just going to give you a perfect example. Look at this. I'm going to show you PIKA on PulseChain. You see, PIKA on PulseChain. Remember the dev? The dev was dumping on us here. So this is a 3-day chart, yeah? The dev was dumping on us here. So the dev was an insider, yeah? The dev's like, I'm going to sell this liquidity now and I'm going to dump on everybody because I'm a dirty Jeet dev. But what came after that? The power of the community, the power of friendship came on and literally smacked him up. And then it went to millions of market cap and now it went to 10 million. You see that? So you can be an insider and know this info, but you can still get bonked by the rest of the market. With the yield curve though, the amount of money putting in, it's unlikely you get, unlikely. They never got bonked, by the way. Just to let you know, that yield curve, it has a 100% strike rate. Once it uninverts, once the Fed starts doing the cuts, this thing uninverts, that's the bad part. But it could still do this and give us time. We don't know. So hope you enjoyed that lesson, friends. That's the yield curve.